Namaskar. This is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. It is budget time again, and news reports are agog with expert opinions, conjectures, and guesses of what would be the thrust of the Union Budget 2022 and what would be its key proposals. A rational mind would expect that the present state of the Indian economy and the long-term goals of economic growth and fiscal consolidation of India should significantly influence the proposals and the initiatives which would be rolled out in the forthcoming budget. For sheer political compulsions, the state of the economy as presented and claimed by the government is always much more healthier than what the ground reality actually is. The official version of the present state of the economy will soon be revealed in the economic survey that customarily precedes the presentation of the Union Budget. While the government likes to confidently claim that growth is back, we think that that is merely a half-truth. Growth is back only in relative and comparative terms and not in true absolute terms. And what is really needed in terms of growth is sequentially consistent and durable economic growth from quarter to quarter, which has been missing in the Indian economy for the past few years. It is not just the COVID waves that make growth uncertain in India. The deeper underlying issue is that consistent growth has been amiss in the Indian economy since a few years, and the government policies, the government reforms and strategy have failed to revive or energize the Indian economy. It has been a patchy and uncertain growth trajectory of the Indian economy, now badly in need of growth boosters for its revival and resurgence, and thus the eyes on the budget again, hoping that the budget proposals will be in tandem with the actual fundamentals, the actual state of the Indian economy. The Reserve Bank's latest monthly bulletin discusses the state of the global economy and also that of the Indian economy. The RBI views do not necessarily reflect the views of the government, and its analysis tends to be a little more credible than that of the Finance Ministry, even though of late, even the Reserve Bank has been tending to paint a rosy picture of the economy. About the present state of the global economy, which directly or indirectly affects the Indian economy also, the Reserve Bank states in its monthly bulletin that the global economy is besieged by heightened uncertainty in the wake of high positivity rate of the COVID Omicron variant. That is causing snarling of global supply chains, and logistics disruptions continue to strain lives. They continue to strain manufacturing and trade, besides stoking inflation risks worldwide. The RBI then says that the pandemic scars worldwide are still healing and output gaps reveal substantial slack almost everywhere in the global economy. It further says that risks to the global economy and its recovery remain tilted to the downside, more so for developing economies, which continue to bear the brunt of the pandemic because of slower vaccination rates. For example, the Reserve Bank points out that just about 10% population of the African nations has been vaccinated. The RBI then quotes the OECD, which says that most advanced economies are poised to return to their pre-pandemic levels by 2023 only, but only a handful of economies might fully recover by then, according to the OECD. The recovery for low-income nations is likely to be even more slower than those of the advanced nations. The RBI further says that growth projections for major economies in the world have been revised downwards, reflecting the slowing growth momentum because of persistent supply chain gridlocks, rising input costs, and labor shortages worldwide. On the global economic front, it further says that global merchandise trade volumes have decelerated year on year for the fifth consecutive month in 2021. The latest World Bank Trade Barometer shows loss in the global trade momentum because of disruptions, primarily on account of the COVID virus. The RBI then quotes the FAO to say that the FAO's Global Food Price Index continues to maintain an uptrend due to demand-supply imbalances climbing to its highest level since 2011, which is food inflation is up highest in a decade, primarily due to mounting cereal prices, decade-high wheat prices, as also those of sugar and dairy products. The RBI then says that inflation risks are getting more embedded, shooting up to decadal highs in most nations. OECD nations have recorded a 30-year high inflation of 5%. It says that inflation in USA at 6.8% is the highest since 1982. In the case of UK, it says that at 4.2%, it is the highest since 2011. And Brazil's inflation at 10.74% is at an 18-year high, with similar elevation of inflation in Russia and China. RBI mentions that with several central banks contemplating faster normalization of their monetary policy, the volatility in global financial markets has intensified. The Fed has indicated the possibility of a quicker withdrawal of the fiscal stimulus in USA, and that is roiling global markets. Financial markets have continued to teeter with heightened uncertainty revolving around the new virus strains and the US Fed's pivot to faster tapering. That was the analysis of the global economy by the Reserve Bank of India. The larger picture of the global economic outlook as presented by the RBI can be summarized as follows. The first point is that economic recovery and revival remains uncertain worldwide, and returning even to pre-pandemic GDP growth levels is a few quarters away from today, even in the most optimistic scenarios. Then, inflation worldwide is at a worrisome level. It is not transitory and it is here to stay. Liberal monetary policies in every economy are ruled out and countries will suck out liquidity from their domestic markets. The further summation is that the global economic outlook is one of cautious optimism. As the Reserve Bank says, it skews the risk to the recovery to the downside and not to the upside. With inflation continuing to surge to multi-year highs for most economies, the headroom for policy maneuvering for authorities and central banks worldwide is getting compressed. And finally, the implications for overall financial stability are likely to be adverse. It is a difficult road ahead for the global economy, even after the pandemic is gone, and at least a year will be gone further in trying to put things back in place to come to just the pre-pandemic levels. About the present state and outlook on the Indian economy, the Reserve Bank maintains an upbeat stand, though it says that concerns revolving around the spread of the Omicron variant remain. The RBI about the Indian economy says that for the Indian economy, recovery is being spearheaded by an uptick in private investment alongside a turnaround in bank credit offtake and high capital expenditure by the government, both at the center and at the states. It then says that the employment situation in India has brightened. As per the CMI employment statistics, the RBI says that the labor market moved closer to the pre-pandemic level, with the number of workers employed in October and November 2021 touching the pre-pandemic levels. It further mentions that as per the NSO, India's GDP bounced back to a growth rate of 8.4% in Q2 of the current financial year over a favorable base. It had the benefit of a low base effect. The recovery in the aggregate remained broad-based according to the RBI. It further says that India's exports continue to register an impressive recovery, emerging as a key driver of its higher growth trajectory. External demand for India's merchandise trade remained robust. Merchandise exports growth stemmed from higher exports of engineering goods, cotton yarn, fabrics, handloom products, chemicals, and also fertilizers. The RBI pertinently and curiously mentions that India is also emerging as the world's space hub for cost-effective launch of satellites. Further on the Indian economy, the Reserve Bank says in its monthly bulletin that the indicators of aggregate demand point to a sustained recovery across spheres, but with signs of sequential moderation. It is not consistent. The end of the festival season reflected in moderation of the growth momentum. Growth momentum suffered after the festival season ended. It mentions then that rural demand moderated with the domestic sales of tractors registering a contraction by 22.5% year on year in November 2021. And the sales of two-wheelers, sales of three-wheelers, motorcycles and commercial vehicles declined sequentially year on year owing to a lackluster rural demand. So the rural also is in a problem. The fiscal position of the government has continued to be bolstered by the net tax revenue, touching an all-time high of 68% of the budget estimates during April to October 21. And because of that, fiscal deficit recorded an all-time low of 36% of the budget estimates during that period, a substantial improvement in the numbers for the government. It mentions that the government capex surged by 28.3% over the previous period, and so did its revenue expenditure by 7.5%. Inflation continues to rise, with prices of food, beverages, cereals, milk, fruits, sugar, confectionery, clothing, footwear, household goods, household services, recreation, amusement, personal care, housing, transport and communication all rising consistently and across the board inflationary trend. And finally, it says that financial conditions remain buoyant and the system remained flush with liquidity, with a surplus of about rupees 9.5 lakh crores in the banking system not being lent out. The Reserve Bank concludes that the Indian economy continues to forge ahead, emerging out of the shackles of the pandemic. It says that the ongoing revival of the economy is driven by a confluence of factors which include release of pent-up demand. It includes government push for capex. It includes robust external demand and a normal monsoon. And that, according to it, a faster restoration of contact-intensive sectors and a speedier restoration of consumer confidence brighten the near-term outlook of the Indian economy. The RBI has an upbeat, according to us, a rosier picture. We differ from this upbeat conclusion of the Reserve Bank. The favorable impact of the pent-up demand in India's growth was temporary and one time, and it is gone and fizzled out. And so is the case with the fleeting surge in the prospects of contact-intensive sectors, which are back in the misery again, which is hospitality, travel, tours and tourism. Consumer confidence remains skittish and edgy, and the key factors that determine and drive growth are sluggish. And what are they? Consumer demand, private investment, and jobs. And those, to us, truly summarize the present state of our Indian economy, which is growth is slow, it is uncertain, and it is therefore worrisome. To us, the real issue is that the coffers of the government may be full, but that's not the case with those of the common man. And to us, that is what the budget needs to focus on. This is Akhilesh Bhargava signing off till we meet again. Namaskar.